Okay, so those of you who took part one and part two know that one of the things I'm trying to do here is kind of create a list of best practices for tax preparers who are involved in virtual currency. So certainly a best practice here is it's not your job to take risks for your client. The bigger problem with virtual currency is tax fraud. Tax fraud is a much, much bigger problem than your client paying a few extra dollars on their virtual currency income. So, we want to be very cautious as to how we proceed, given that there's been, just a skeleton's worth of guidance on virtual currencies. So if you're doing anything on a tax return that might raise an eyebrow at all, disclose it. Disclose. At least then we don't have a tax fraud situation. Okay. Virtual currency clients. So when I first got involved in virtual currency, my office was very worried. Does this mean we're going to have to accept Bitcoin as payment? And the answer is no, not at all, because there are Bitcoin debit cards, a bazillion of them. And don't be surprised at all if your client hands you a debit card. It's a Bitcoin debit card, and it doesn't make the slightest bit of difference. It's going to show up in your system as dollars, and it's going to take Bitcoin directly out of there, or whatever virtual currency directly out of their account. So there's no need for you to be making any changes in how you accept payment. So one difficulty with virtual currency clients is bookkeeping. So, I have a couple, I've mentioned before, I have a couple of S-Corp clients who mine Bitcoin. And what I get is, of course, I get the profit and loss statement and the balance sheet from the bookkeeper. And then I get the CSV files, after they've been through the integrator. So I see it essentially 8949. So, then I need to ask questions. I see that you bought equipment. Did you buy it with dollars? Or did you buy it with the virtual currency? What was sold to buy the equipment? Oh, yeah. Actually, we sold that virtual currency to buy the equipment. Okay. So the income that's on the P&L, does that include income from the virtual currency sales? When you sold virtual currency, did you then put the money into the P&L? Or how did that work? Oh, yeah, no, I guess we didn't. Okay. So where'd that money go? Well, that went into a different account. You see where I'm going here. And this always happens. I have yet to see a balance sheet that actually lists that company's virtual currency that it owns as an asset. The bookkeeper always goes, oh, yeah, I guess that is an asset. Yeah, that is an asset. So, you may have to ask a lot of questions in order to really understand how this business worked with regard to, essentially, really two different accounts. Virtual currency account that's not linked to the checking account in any way, versus the QuickBooks P&L or the Excel spreadsheet or whatever you're being given. So that's something that you're going to really want to just ask questions. Just keep asking questions until you understand what went down. Now, this is a question that for some reason I've been hearing a lot. I get a phone call and the question is, should I create an LLC to own my virtual currency? And I really kept scratching my head, well, why would you think that? And the person said, well, that's just what's being said on the forums, is you should set up an LLC. So I'm going to just categorically say, I can't think of any reason why owning investment virtual currency through an LLC is in any way different than owning virtual currency as just an individual. Now, if you're mining virtual currency and you're making a lot of money, you might want to set up an LLC and then make the S-Corp election. Okay, I can certainly get behind that. But other than that, I don't see how owning virtual currency as an LLC helps in any way or changes your tax situation in any way. As we know, an LLC is a disregarded entity. It's a sole proprietor LLC. Okay. Another thing that we want to make sure that we understand as a best practice, we want to make sure our clients understand that virtual currency tax law is a brand new little tiny baby. There have been no court cases yet. There's been very little that's really been ironed out. Certainly we as tax preparers, we don't want to take the hit for the IRS making changes and making them retroactive as they do. So we need to make sure our clients understand that we cannot read the future of virtual currency taxation. We're preparing their tax return as best we can with the information that is currently available, but tax laws change all the time and future amendments could be required. So I strongly recommend that utilizing a questionnaire and an engagement letter for our virtual currency clients is the best practice. And a little bit later, I'm going to talk about what kind of question and engagement letter language we might want to use. Now, one of our jobs, of course, is to educate our clients. So I tell my virtual currency clients, stop now and find the basis of what you currently own. If you don't know the basis of what's in your wallet right now, stop before any more time goes by and try to recreate it. Come up with some way of creating a basis for this virtual currency and document how you did it. I mean, better now than a year from now, and better make some attempt than just making it up, out of thin air. Don't do anything you can't document. Stick with exchanges that are supported by Bitcoin.tax or one of those similar software companies that will let you directly upload your CSV files and spit out an 8949. Either that, or commit to keeping your own spreadsheets, one or the other. Now, these people don't like to print stuff out. They're very high tech. They want to live in a virtual world. But the problem with that is, if something happens to your exchange and it shuts down, if you have nothing printed out, you have no proof of loss. You have proof of nothing. So I say print out statements. If you want to live in a virtual world, that's great. Save them in a PDF. Store them somewhere. At least you've got something, right? Okay, don't rely on like-kind exchanges. Pay your tax as you make the sale or trade. And stay in touch with your tax advisor. Okay, I tell them, don't surprise me when you come in February. Don't surprise me with some new thing that you've never mentioned to me before. For one thing, this gives you as the tax preparer time to get smart on the subject, right? And also to steer them straight if they're headed in a wrong direction. So I think that's very important. Best practices for us. So this is going to be the summary of the best practices that we've talked about throughout parts 2 and 3 of this class. One is you're going to specifically ask clients if they have any dealings with virtual currency. And the reason for that is that we know there's a huge underreporting problem. People are not reporting their virtual currency income. Make sure your client understands that there are significant tax impacts of engaging the virtual currency world. You want to sort of just walk through it with them, or have them read my book. Honestly, that's why I wrote the book, because I want people to understand this is serious. Anything you do in the virtual currency world, short of just buying it, has tax impact. You need to know what you're doing. Have the client list all their virtual currency income sources in writing. You don't want to be told later, oh, you didn't ask me about my Steam account. Let the client be responsible for providing the 8949 information. Don't get involved in letting them send over their CSV files and you wading through it. I guarantee you're going to regret it. If the client has inherited virtual currency, make them document immediately the value of that inherited virtual currency. Virtual currency losses. I think the safe practice is to take it on Schedule A, not on Schedule D. If your client had $10,000 or more in a foreign exchange at any point, I would say file the FBAR. I believe in my heart that at some point the IRS is going to require that, and they're going to require it retroactively. Don't rely on like-kind exchanges. If you have a client who's trading Bitcoin for Ether or whatever, you report it as a sale of the Bitcoin and a purchase of the Ether, just as if they were doing this with stocks. I don't think we're going to get away with like-kind exchange. Don't take risks for the client. Tax fraud is the bigger problem. And finally, use a questionnaire and an engagement letter for your virtual currency clients. And we're going to talk a little more about that. Okay, so what are you going to add to your questionnaire? In the past calendar year, something like this. It doesn't be these exact words. Have you had dealings with virtual currency such as, but not limited to, okay, so something like this. And yes, the vast majority of your clients are going to say, I don't even know what you're talking about. Or one will say, I had this happen. Oh, is that still a thing? Yeah, that is still a thing. And I had one client who said, oh God, please tell me we're not going to all have to switch to Bitcoin, which was actually kind of sad. And then you'll have the client who says, well, yeah, but I thought no one had to pay tax on that. And yes, now you know that's why you added that to your questionnaire. Okay, so for mine, I have also added little, kind of little things like this that let people tell me what they have done with virtual currency. Have you earned it? Have you sold or traded it? And I let them check, what have you done with this? And now if they check none, if they say no, I've had no dealings, that's great, not a problem. We're on to just normal life here. But, a lot of this is, we're kind of trying to cover ourselves in this. So much of our work seems to be about covering ourselves. Engagement letter. So I'm not an attorney, so I'm not going to tell you exactly how this should read, but these are the points you want to make in your engagement letter for virtual currency clients. Tax laws are in their infancy, subject to change or reinterpretation by the IRS or tax courts. The client understands that your firm is going to prepare their tax return using information that they provided and under virtual currency tax law as it is now understood, and that you are not responsible for taxes, penalties, or interest that may result from withheld information or change in reinterpretation of virtual currency tax laws.